Hi, it's Dwyer. It's December 3rd, 2025. Keeping it free.blogspot.com, a free site. Also, digitalassetlife.com, a free site. Nothing I say in this video should be construed as investment advice. I want everyone here to do their own due diligence. If I mention an investment vehicle, your operating assumption should be that I'm either interested in buying it or that I already own it. Remember, the opinion you should follow should be your own. The risk is all yours. Let's talk about the general state of the market. Folks, as of December 1st, 2023, 2 days ago, the S&P 500 price was 6,812.63. Right? Just understand that's above the 50-day simple moving average. Right? That 50-day simple moving average is 6,727.94. Right? Understand too, both the 50-day simple moving average and the current price are well above the 200-day simple moving average. Let me just say that while I myself expect the market to revert to the mean, while I myself have concerns over the fact that the Buffett indicator is at roughly 2x, in other words, the market is overvalued to the point where it's 2x what it should be. Let me just say that I don't believe a collapse is imminent. A collapse is going to happen in the next 3 months. This is not what that looks like. So right now, whether rightly or wrongly, markets are humming along. Let's talk about the repurchase rate, what some call the repo rate. Understand what that is. It's where banks need short-term liquidity. They need cash. So they'll sell treasuries to the Fed with the understanding that they'll repurchase those treasuries in the future at a slightly higher price. In other words, they get cash today based on an agreement to repurchase the security they pledge tomorrow. Right? Well, I need for folks to realize that the Federal Reserve right now is trying to increase liquidity in general, and that's reflected by the fact that the Federal Reserve recently injected $13.5 billion. Let me repeat that. $13.5 billion, a huge amount when viewed historically, into the repo rate market. In other words, it's telling banks, hey, we have more money to lend you so you can meet your short-term obligations. Right, folks? For gamblers like you and me, what that means is they're goosing the market. Right? It's early December. We're heading into Christmas. Of course, next year, 2026, you have midterm elections. The Federal Reserve is willing to play ball to elevate liquidity. Right? Think it through. Now, who does that help? Folks, I would argue that that helps cryptocurrencies. Crypto's had a rough run of it. Right? But let me just say, you're far worse off if your crypto is the only one that's dropping than you are when all the cryptos are dropping. Because you and I understand that crypto's the future, to the point where traditional finance is figuring out that it has to get on the blockchain. It has to offer blockchain access to its customers. So let me make a few points. This is far from consensus. In fact, this isn't the consensus. This is one man's opinion. I've been having dialogue with some people here online. Folks, it's my belief that it's going to soon become apparent. It's not apparent now. Right? Gold has run off and hid. Bitcoin has lagged. But it's my opinion in the coming months, literally within, let's say, the next 12 to 18 months, that Bitcoin will be increasingly viewed as a risk-off asset. In other words, I know it's counterintuitive, but I believe investors in tough times are going to think to themselves, I need a safe harbor. And one of the safe harbors is going to be Bitcoin. Now, critics like Peter Schiff will ask the question, what is Bitcoin backed by? Right? With gold, I can, wear gold as jewelry. Right? With gold, there's a tangible metal, precious metal, that exists, right? Above and beyond any bartering capability. There is something with a utility that I can melt down that has value. I would argue that Bitcoin's inherent value comes from its scarcity. Its proven scarcity. Right? Its resiliency. Since its inception more than a decade ago. But understand that's not the public narrative. The public narrative views Bitcoin as a risk-on asset. So the dialogue is such where Bitcoin has a dip and people start asking questions they wouldn't dare ask when discussing gold or silver. Right? The questions include, will Bitcoin ever bounce back? Right? Any meaningful downturn, and Bitcoin's had a bunch. Bitcoin's been volatile. Any meaningful downturn, and you have critics saying, well, this proves that Bitcoin's an illusion. That Bitcoin's never going to bounce back. Folks, I view any meaningful downturn as a buying opportunity. I think strategy at these prices is a steal. I think that'll be increasingly apparent over time. As I make this video, Bitcoin is selling for about $93,000 a coin. Folks, we're still in the early innings. Sovereign nations are still trying to figure out how to increase their Bitcoin reserves, how to increase their access to the Bitcoin blockchain. Understand, while I believe in Bitcoin and Ethereum and other coins, right? What, dare I say, people used to call altcoins, perhaps some people still call altcoins, but just understand, with Bitcoin, there is no Vitalik Buterin who can step from the shadows and is viewed as the founder of the protocol, who can actually force the chain to split, right, to unwind transactions. Bitcoin is proof of work. It's not proof of stake. If you're a sovereign nation, you don't want your monetary supply beholden to a Vitalik Buterin. Not that Buterin's a bad actor, right? But you want decentralized power. You want your monetary supply to be decentralized. I understand Bitcoin has Satoshi Nakamoto We don't know if that person's an individual, a group of people. We don't have that information. Right? I suspect we all understand, though, that proof of work is much more diversified than proof of stake. Let me also point out, too, that you have DeFi taking off. I know there are many people who, are questioning the viability of Ethereum, right? Even as they support stable coins that are based on the Ethereum protocol, right? I need for folks to understand that Ethereum is selling for around $3,000. As I make this video, just understand, if you look at the last 12 months, Ethereum's revenue totaled about 1.42 million Ethereum. So you have an interesting situation here. And what I'm going to say is not the public consensus. But you have an interesting situation where you have a technology that is a must-have technology. Right, folks? It's must-have. In other words, many of these traditional finance participants understand that whether or not they want to engage in DeFi, decentralized finance, that ecosystem, they have to know about it. Right? You could be a traditional stock trader, right? Trading stocks only during normal business hours, according to historical custom, Monday to Friday. You need to know about stock tokenization and about the market that exists right now, involving outfits like Ondo Finance that allow you to trade stocks 24 hours a day, 7 days a week. In other words, we're at the point where digital assets, cryptocurrency, and the ecosystems that have developed involving cryptocurrency are here, and they're not going anywhere. Right? So you have some new cryptos that have come out. I'm not going to name any here. I have paid subscribers who subscribe to my Substack crypto newsletter, Dwyer 70905.substack.com. It has a free layer. Again, DWYER 70905.substack.com. You have some coins, some new coins, that are selling for pennies. When I say pennies, folks, I'm talking about below 5 cents a coin. Right? This is in a world where Solana is now up around, $130 a coin, that are Ethereum virtual machine compatible, with the ability, at a time when traditional finance needs to get on the blockchain, is making that move. Right? These new coins have the ability to provide privacy while adhering to regulatory compliance. Right? Know your consumer and things like that. Folks, I believe this is a time for speculators. You already see cryptocurrency not just gaining traction, but entrenched in some areas. Right? I'm sure we've all been out and we see people at a Starbucks getting coffee using their phones. Right? I myself send out bills to people and I give them the option of paying me by ACH or using Cash App. Right? You understand electronic payments are taking over. They've outlawed pennies. right? If I were walking around with cash, I'd have nickels, I'd have dollar bills, I'd be less safe than I am with a digital wallet on my phone that uses biometrics. In other words, it needs my fingerprint to open. Someone could pick my pocket if I'm walking around with cash, right? I reach for the wallet, it's gone. They have my bills, they're spending my bills. I can't stop the payment. Just understand, they can't do that if I have a digital wallet that requires my finger. In other words, I'm out, someone pickpockets me, they take my phone. Folks, they won't be able to open the wallet because I still have my finger. They've picked the phone where they can't access the financial wallet. Let me shift gears here. I see I'm already 16 minutes in. I want people to imagine a very successful restaurant, right? In an area with changing demographics. So let's say that a lot of Africans, a lot of Ethiopians, or people from Somalia are moving in the neighborhood, which, by the way, is happening all over Europe. It's happening in places like Minneapolis, right? You have a sizable African contingent that's moving around, right? Just understand, Africa, the continent, has more than 1 billion people. It's one of the few demographically blessed places on the planet right now, right? You have decreasing birth rates in places like Europe, Japan, China. You have increasing birth rates in places like Africa, right? It's only a matter of time before African culture spreads to a much greater degree than has happened in the past. So, you have a lot of Africans moving into your neighborhood. The successful restaurant, which is making money hand over fist on their other offerings, decides that they're going to offer some Ethiopian and Somali dishes. Right? Their goal is to make money. Critics would call it DEI. Who knows what the critics are thinking? Just understand, the goal is to make money. This is something we call capitalism. Well, just understand, a successful restaurant can subsidize these lines of cuisine with revenue that they make off other restaurant offerings. Right? The restaurant was successful before. Now it's trying to reach out to other sectors of the market, and it can do so in a way where the underlying business subsidizes these, dare I say, capital expenditures, right? So that its Ethiopian dishes and its Somali dishes can, be presented and given time to generate consumers, right? The idea is that in the long term, you're going to benefit greatly. Hopefully the word gets out in the African community, and the customers will find your restaurant and be there in droves. In other words, you're assuring the future success of your business by figuring out and serving your customer base. Now, folks, by analogy, that successful restaurant that has a lot of, we'll use the term here, free cash flow, that has decided to offer additional lines of cuisine, goods and services, view it how you want, to its demographically changing customer base. That restaurant, by analogy, can be considered Google, Meta, or Amazon. Right, folks? It can't be considered OpenAI. Folks, understand, with Google, Meta, and Amazon, you have different business lines that are kicking off all kinds of profits that are enabling these Goliaths to then say, you know what, we're going to use some of our free cash flow to develop our AI capabilities, right? To pay for these data centers, to enter into agreements to, you know, recommission 3 Mile Island or, you know, whatever nuclear reactor is out there, to develop things like Gemini 3, right? To make things, you know, where our users can say, hey, I can search or I can do an enhanced search with AI. I can ask my AI to actually create my business logo. I can ask my AI to summarize articles, YouTube videos. You know, I can ask my AI about restaurants, about history, etc. Right now, what I need to have people understand is the general public thinks that all of these players are on the same playing field. That's not the case. OpenAI doesn't have a restaurant that can subsidize its new line of cuisine. Right? There's no outfit that's kicking off free cash flow that OpenAI can then decide to invest in AI. Rather, OpenAI is entering into vendor financing deals with outfits like NVIDIA. Right? Full disclosure, I own a little NVIDIA. I own a little Google at the moment. In the past, I've owned Meta and Amazon. Right? I'll let that land wherever it does. But I need for people to understand how different OpenAI is from these financial Goliaths, where they do an earnings report, you hear the CapEx numbers, your head gets thrown back, right? Let's say it surprises you. And then you think to yourself, well, you know what? We have the money to make that CapEx investment. Hell, we have the money to even fool around and make our own ASICs chips to compete with, you know, NVIDIA's GPUs. Folks, OpenAI doesn't have the money. And here's the troubling part of the situation. And I'm just talking from an investor perspective. I hope OpenAI makes it. There'll be consolidation in the space. You can rest assured about that. I hope OpenAI makes it. But just understand, Google, Meta, Amazon, they're publicly traded companies. In other words, whatever they're doing, every few months they're going to have to give an earnings report. Right? The media is going to be listening in. It's going to be reported on. There'll even be whisper numbers in advance where people say, hey, I think they're going to make this much per share. Right? You know, I think they're going to announce that this product line isn't what they thought it would be in terms of profitability. You know, just understand, publicly traded companies are far more transparent than private companies, right? A private company doesn't really have to keep you in the loop. Their holders are, venture capitalists, people who participated in Series A, Series B, Series C funding, right? They don't have to tell you things like, as Meta had to reveal recently, due to changing governmental policy, we have a one-time tax hit, right? You can imagine the whisperers said, oh my God, we didn't expect this. Meta, a vibrant company, got hit on the stock price. They took the hit. They had to take the hit. That's the price we charge for being a publicly traded company. You have to discuss your finances. You have to take the occasional hit, even when much of it's outside your control, right? The government changes tax policy. You say, okay, we're going to take the tax hit here. With OpenAI, folks, there's more mystery. This is the difference between a public company and a private company. So here's what we know, right? And I'm not saying OpenAI is doing anything untoward, right? The truth is there's been vendor financing in the past. That's part of Silicon Valley history. Startups are, looking for financing wherever they can get it because they don't have the restaurant part of their business that's kicking off free cash flow. They don't have that level of access to capital. So folks need to realize that AI is not just energy intensive, it's capital intensive. To be a player in the space, you need to solve both of those issues, right? OpenAI is not on the same footing as Google, Meta, and Amazon, right? Maybe a lot of people are using OpenAI, right? But you need to understand that companies can operate on optimism and, borrowing / deals that they have to pay back later for a long time, right? At some point, you have to solve the issue of how are we going to pay for this? In the example I gave, a successful restaurant can say, hey, let's offer Ethiopian food. Let's offer Somali food. There's a vibrant customer base out there. Let's try to get them in our restaurant. And if we have to spend some money, maybe an ad campaign to get the word out, right? Maybe money to hire chefs to figure out the cuisine we're going to offer and how we're going to make it, we'll pull that money from the successful part of our business. With OpenAI, folks, there's no restaurant that's kicking off free cash flow like there is, figuratively speaking, with Google, Meta, and Amazon. You need to be aware of that risk. Those are my thoughts. Let me hear yours in the comment section of this YouTube video. Let me point out too that if you're an OpenAI supporter and you want to be heard, there's no restriction here. Go ahead and offer your comments in the comment section of this video. This is a free speech zone here, right? You don't have to agree with me. You can take an opposite position. Great. Right? Let's just throw it out there and see how it lands. I look forward to reading your comments. Thanks for stopping by.